Good morning, everyone. Welcome to this new session of the morning briefing. Let's get started right away. Here we are. So, what can we say? How to frame it? In short, what happened? It's a little bit of what we had. In short, a little bit predicted. In short, these continuous changes in scenarios because there was a bit of easing on the tariff side by Trump. In short, market expectations have returned for a risk on. Yesterday with a nice upward trend, beautiful, pronounced. It was a start to the week, quite directional, with a gap that had already given indications as mentioned in yesterday's morning briefing, and the market continued to rise. In short, nice with good momentum without excesses but consistently upward. So we are now in those areas that we had indicated, 24, 34, 25. In short, that network as far as the Nasdaq is concerned, which could certainly be areas of resistance. We'll see in short what to do next. From a macro perspective, today there are two data points. There's consumer confidence, and that could certainly in short give some movement to the market. And the sale of new homes in short, not particularly anticipated by operators. So these are the two themes. Then tonight there's a FOMC member speaking, but the market closes at 9:30, so it's not very influential. Perfect. I wanted to make a quick clarification regarding the indicator released yesterday, the two assets indicators. That was the first version. Yesterday I had this idea. I managed to frame it so much so that we can, I'll just show it, then I need to adjust it better. We also have the volume pressure inside, but calculated differently compared to GPS. And we can move. We no longer have the signal lines here, but we have them in the table above with the bias. And in addition, we can move and enlarge. In short, we can make the label large, for example, right now, just to show you, and we can move it, for example, more to the right. Okay. So it doesn't bother us, in the view of the chart. Okay. But I need to adjust it a bit, and I will update the two versions of the indicator. Okay, having made this brief excuse what to say. At the moment, we are working. In short, the VC3 levels are nicely upward. At the moment, they recorded this high yesterday at the close. We are working below the heavy levels. At this moment, it is 9:15 in the morning, so it has just opened. Also, the European markets. From a me. I apologize. So European markets have been open for a quarter of an hour and are trying to push a little downward. We will probably be in this area here. So between the opening, in short, you see it is the closure delimited by these volume spikes. So probably in short, we will act within this range before eventually being able to proceed. In short, I repeat, it seems at the moment that a risk-on sentiment has returned to the markets. We will see then if all this will be truly sustained in the coming days to follow. Yesterday, in short, it seemed that this appetite, a bit of risk appetite, returned. So much so that even the magnificent ones, in short, have achieved quite respectable performances. Okay, having said this about the Nasdaq, obviously, in short, the rise and the breaking of Eriko's highs coincide with this VC3 level. So area 24. In short, that's the one to monitor. A break could certainly lead to a view volatility, in short, immediately to a test of RD1. Let's see for them a more or less similar situation. I haven't loaded it yet here. In short, the new version of the indicator is flying, but the old one here has shown the opposite. Short from HD? Here. Obviously. In short, these should not be understood, guys, as signals for you to open trades. It's something to indicate what's happening in the market and thus support your decisions. But it's not an indicator that gives you signals so you enter when... It should be a support to help you understand the logic behind the strategy. Okay, I created it for you to apply the strategy. And you need to be the masters of understanding how the strategy works and how to apply it. The indicator can make mistakes, but it can certainly help me in many circumstances. Okay, perfect. That said, for there to be a moment of the same situation, we are working below, let's say, this candle. In short, quite significant a decline from the highs. In short, it will be tough to pass above it again, which then coincides with the HV level, more or less. In short, it retests the minimum. So HV is certainly an important level, which then coincides with E15. A break of this level would certainly attack, which then, in short, is the last stronghold. A break could bring prices to E50, which is the area where I expect, honestly, a bit of selling, as I've already mentioned, for several days. That's the area, in short, where I expect sales, but they might be overwhelmed because the market, as I mentioned earlier, is in a phase. In short, there's been a bit of a return to risk appetite downward. In short, obviously, the level to monitor. I believe that, in short, so this area here with this level that we also pointed out live yesterday, in short, that with the live session, help yesterday at the opening. So this, in short, is the level to monitor. Let's take a look at the others. The Dow Jones and then the Russell Dow Jones. Same situation, in short, at the moment. There's this nice candle that has somewhat dampened the enthusiasm. So this will be the low to surpass, more or less, for the Dow Jones, obviously, 43. Then in short, it's the obstacle to overcome for the round number and everything that then somewhat coincides with today's 0 hour area. So this is the downside, obviously. In short, this area here of SD1, in short, is the one I would monitor here. In short, I expect, in short, a rebound in the market, though. In short, then, if it were to break this area here of, it might be possible to consider closing the gap. Let's not forget that there are these open weekly gaps could, in short, easily close and then restart. In short, we must be open to all scenarios. Let's look at the Russell, how it acted yesterday. In short, it was nicely pumped. Yesterday, it made this nice move that I had pointed out with a small short that then took off. Then you see how it retested. Then it found the strength to break again. It broke the previous high, but it didn't find much momentum. In short, in the end, then in short, it went to retest exactly these levels here, which then with the scores coincide with 0. We are working right here at this moment. You reveal PC3 to me, so a nice ring. It is between 126, probably 111 or some long. Also maybe in this reacquire level PC3 of 108. So this is the area to monitor for Enzo's review. It's very volatile, even more than another, which in short, in terms of absolute activity, the review. So those who work with it know it well. So these are the areas, obviously, on the upside. A break of 127, 128 could open up on new spaces. We will also see if it is already working above these highs here. So it has settled right on these highs here. So this is the area to keep from re-entering this lower limbo. If it holds this reaction, I expect a test and probably an upward break of these levels. Okay, well, let's take a look at the DAX, which is hitting a little bit at the top. In short, the European markets, well, a bit due to the scenario we hypothesized, the buy the rumors, sell the news. So in short, it's hitting a little bit at the top, even though, even if you saw yesterday, despite the American markets continuing to rise, in short, it lost in terms of relative strength. In short, I remember that the DAX has been overperforming compared to, for example, the S&P by about 25% if we look from October, November, until a few days ago, and now it has started to correct. In the sense that the DAX is losing momentum strength while it is being regained. A strong upward force on the American indices. In short, now, as we saw yesterday, this could lead to a rebalancing of this spread between these two futures. One could also consider doing short DAX and long S&P operations, going to hedge the position. In a certain sense, more than hedging, to actually create a spread. This is said in technical terms, but maybe we will delve deeper into these topics sometime. Okay, so the DAX in short, no caution. for those who work with it, because it seems a little, well, to be hitting a bit of a ceiling. The operators seem to have lost a bit of interest. Even the volumes have decreased a bit in recent days, so caution for those who work with it. At the moment, it is operating within this range of levels. BCT. In short, below, this is what was created this morning with the reopening of the Asian markets, because it has slightly different hours, obviously, from the American futures, the DAX on the OE. We are working right on the level. Harvey. In short, it will probably continue to oscillate in this area here. I expect in short this area of the 23,050, 23,000 in short held 1, 2 all during the night, so a break of this area could certainly give a bearish push also precisely for the area of levels X, today's signal from Croce's estimate. Let's move to oil, which at the moment in short seems to have picked up a little, precisely on the push of this economic recovery. So this returns. Toriscom has resumed moving upwards. If we haven't exited, let's say, exited from this range that we had indicated, it is trying to break out with an attack on this area here at 70, which then coincides with the area of today's maximum expectation, the highs of the string. So a break of RD2 at this moment could certainly drive prices. In short, in this area, so 70, 77, even 70 and 50. Then we'll see in the coming days also 70 and 60. In short, the area you see of these previous highs, so certainly a test of this area. Yes, with a break of RD2 can easily happen. Okay, having said that, let's take a look at them as well. As usual, obviously in short, as a result of the return of risk on, it has hit a bit of a ceiling, but it managed to stay above 3,000. It has done some tests, not with excessive volumes. Now it seems to be returning a bit to a sideways movement. Essentially, at this moment, it is moving in short. It's hovering above 3,000, between 3,000 and the highs reached. If we broaden the horizons a bit, so 3,036.5, this is the area where it is operating. At this moment, it is working below the BC3 levels, so we can probably also expect a continuation because this seems to be a sideways movement, maybe a test of these levels. It could be a failed breakout of this area here, which then coincides with RD1. And so with this, all these BCD levels need to be surpassed. So the area between 30 and 20 and 30 and 35 is the one that I believe needs to be surpassed in order to aim for an upward movement. Obviously, the holding of these levels could certainly push the price to also test 3,000. Perhaps a break to go hunting for stops below 3,000, where there will probably be many thought out. We will see what happens, as always. We don't make plans in advance. Let's take a look at SPX, which with the start of the week has moved above that level we have pointed out several times, which was the target previously. It seems to be nice, directional. It's reread towards the area of, which would then be transformed on the future. So just above what I pointed out earlier. In short, that's more or less the area, so to which to refer to, because in short, once we get here, then, well, it will be tough. But if it obviously manages to pass back and return, well, into this range here, then the scenarios are open. In short, with a push from everything we mentioned at the beginning, so with all this feedback return to the markets, it could certainly push prices, considering, well, that essentially, well, after the big drop, one can still find stocks at a discounted price. Surely this could attract many investors. Perfect. Having said that, we'll catch up later in the chat. As always, leave a like on the video. Thank you all for the attention.